Hello, this is Patrick. Welcome to Chart Built Wealth, profitable investing with technical analysis. I wanted to revisit the U.S. Cannabis ETF, MSOS. I am reinstating a bullish call on the index. So let's get into it. I've been patiently watching this over the last week or two. But before we get into that, let's take a look at the intermediate term chart of MSOS. This was the big bearish trend line that told you not to buy it. This was it went from 60 down to 5, and then it bounced around at the end of last 2023 in the form of a symmetrical triangle. It When it broke out and retested that, I recommended purchasing that in March with a $13 price projection, which was the target based on the symmetrical triangle. After getting a poke upwards, it's been kind of twisting sideways in kind of a mess. And now, as this has developed, I kind of understand what this mess is. So here we go. I want you to notice, though, even with the mess, we're still seeing higher highs and higher lows. So that's a bullish sign. And here we go. So this was the original closer look at the mess. And here's a symmetrical triangle. This was, we got up to 1136 with a price projection of 13. But before that happened, we had a retracement. We broke our stop, closed down at 1160. I'm sorry, 860, which generated a stop. I said on the call that I had sold a third of my position on that stop. And then here we had a bullish engulfing pattern where this nice big white bar engulfed the red. And I said, I kind of went over strategy and talked about still owning 2/3 of the stock. And if it was able to break above the confluence of moving averages, I would add to that. Of course, it went up 25% in one day. So I had 2/3 of my position left, and I said on the call that night, I hope you were selling some if you still had it. If you're a buy and hold investor, if you sold partial or whatever you did. And then we had a big downward retracement, but now we're back on the confluence of moving averages. So from that standpoint, I still think things look pretty good. But what's transpired with this mess is that uh, I think it looks a lot cleaner right now. And so I have more confidence in where I believe we are in the development and in the advance of MSOS. So, one of the tools that we use in following trends is the Elliott wave theory, which believes that trends or cycles go in waves of five, with 1, 3, and 5 in the direction of the bigger trend, and 2 and 4 counter trend reactions. So you can see the blue numbers were my previous wave count, but that's before. It was really tough to decipher when you get into triangle situations because it's very erratic. It's a compression of volatility. And so now that this has developed more and more, I have more confidence that this is in fact a triangle. And so my new wave count is 1, 2, 3, big third wave. You can see it broke out of our bullish channel here to the upside, which is typical of third waves. They're usually the largest and the most intense, and in an uptrend, the most profitable. In a downtrend, the most losses are incurred. So, and then we've traded sideways since then. So, worked off this overbought situation in the form of a triangle. We have an A, B, C, D, E, and now a little pullback here. You'll notice that E had a slight breakout to the upside, which is a sign that gives you a little more confidence that the resolution of the triangle will be upward. Doesn't guarantee anything, but it does give you a little more confidence in that. And so if you measure the base of this triangle and you project upwards, you get a $14 price projection. So kind of the same landing area as the 13. Nothing to get excited about there. But we have this confluence of moving averages, and we have prices sitting right on that. And I really toyed with doing a very tight stop at 9, but I'm going to give this some room at 8.25. That gives us about 12% downside, which in this volatile stock, it is a lot. So, but I want to give it some room based on the triangle. The upside projection of 14 gives us a 4-to-1 reward to risk and potentially 49% upside from here. So I'm willing to take that risk. I haven't lost any money. I've actually made a little bit of money on this, made good money on it. But again, my recommendation, I did get stopped out. I've been patient. I still try to follow through and coach you through for those that were still owning the stock. And now, after being patient and watching, I'm ready to reiterate a buy rating on this stock. 4-to-1 reward to risk, 49% potential upside, and I want to reiterate that buy recommendation. Let's take a look at one more chart here, the point and figure chart, which I put a lot of weight into. The reason is it's the least subjective chart that a market technicians will use. It is just a pure supply and demand chart. Each row of X's represents up movements, and O's and O's are down movements. So you can see we had a buy rating. We had a breakout here, giving us a suggested price projection of 19, which would be right in the resistance level of the bearish trend line here on the point and figure chart. And you can see that if we get down to about 850, it will nullify this bullish price projection, and it will kind of be in tune with my stop of 825. So I think that, again, the reward to risk is lining up. I think the upside is attractive, and I want to be a part of it. So I'm reiterating my buy recommendation. Please like and subscribe. Please do that. And thank you for watching Chart Built Wealth, Profitable Investing with Technical Analysis. Have a great day.